So, Commissioner, thank you for joining us for our district meetings. I appreciate the time you gave us for our legislative conference. I think everyone found it very informative. Again, it's always a pleasure to have you with us.
Hey, thanks, Chad. Really appreciate the invitation. I always enjoy and all of your members, and really appreciate the invitation to spend a little time with you today.
Let's get started. Let's start with the sales tax collections. The last fiscal year found out the sales tax collections grew by 15%, which astonishingly was exceeded projections by about $2 billion. $2 billion. It's hard to imagine that big of a number at any time, let alone in a pandemic environment. And then just last week, we learned that through the first quarter of this fiscal year, sales tax collections were coming in 20% higher than at the same time last year. So I just wonder, looking at these increases, are they the result of just overall growth through all sectors, or are there particular sectors that are functioning and performing really strong? Maybe perhaps you could just offer an overview of various sectors and how they're performing.
Yeah, it's a great question. I mean, obviously, we're really pleased with the strength of the collections so far. Definitely, these are interesting times, as they say. The short answer to the question may be that, broadly speaking, if you look at retail, you look at services, you look at non-retail, non-service, you look at those broad sectors, they are up year to date. They're higher than they were at this point last year. Importantly, they're higher than they were at this point in 2019. And we're doing a lot of sort of that dual comparison as we watch what's going on, because what you're comparing to matters so much. And obviously there was a big disruption in 2020 and we've recovered. So we're kind of looking at both. How do we compare year over year, but also how do we sort of compare where we are today versus where we were pre-pandemic? If you sort of drill down into some of those sectors, I think some of the good news and what's been, it's been talked about a lot, the impact of COVID on restaurants and hotels and amusement and those places where folks gather and that sort of thing. They were obviously significantly impacted, but they are back in terms of growth, not just over last year, but over pre-pandemic levels. So to give you a couple of examples, if you just looked at our most recent month of collections, which were October collections reflecting September sales activity. And you compare October of 2021 to October of 2019, restaurants and bars are 12% higher this October than they were October 2 years ago. And services, including hotels and amusements, are 33% higher this most recent month than they were for the same month 2 years ago. Those numbers are even bigger if you compare it to last year, for obvious reasons. But if you look at that sort of today versus pre-pandemic, it's still robust growth in those sectors. And Chad, another interesting sector to look at, there's some that had been particularly high, some specific industry sectors that were particularly high during the pandemic. And I'm not even talking about online sales. I imagine we'll probably get to that here in a minute. But groceries, for example, really stood out at the height of the pandemic a lot more. We saw a real rise in grocery store sales for obvious reasons. And so if you just look at October of this year versus last year, there's a slight decline, but that industry is still up like 10% over where it was pre-pandemic. It's just there's a slight decline as compared to that peak that they saw during the pandemic. So there are a few industries in that category as well. So really, all sectors are showing growth. And now there's some, if you drill down enough, you can find some like, bookstores and newsstands have been going down for a long time for totally unrelated reasons, and they continue to be down. If you drill down enough, you can find a few. But generally speaking, sectors have recovered and are above where they were pre-pandemic.
All that sounds great and very encouraging. And who would have thought, looking back 18, 20 months ago, that we would be reporting and hearing such report. We're certainly pleased that we have that now. Not to be a naysayer or a pessimist, but I have to ask the question. Good numbers, looks like good performance, but is there a danger of the horizon? Right now, I think everybody, the concern, the news of the day is about inflation, the supply chain issues. So are you seeing anything in the numbers? I know they were strong, but is there any indication, maybe a leading edge, that we're starting to see an impact of either inflation or the supply chain on retail purchasing, or the more important, the business-to-business transactions that account for such a large percentage of sales tax?
Thanks, Chad. And I'm glad you mentioned sort of a note of caution because certainly the revenue growth has been really good. It's been strong. The most recent collection numbers continue to be strong, but we definitely need to be cautious as we sort of move forward because there's a lot of uncertainty. I mean, these are clearly unprecedented times. And you've pointed to two of the things that folks are concerned about and are talking a lot about, which sort of highlight that uncertainty. Inflation. What type of inflation is it? Is it transitory inflation? Is it going to be something that's more long term? We don't know. And the supply chain issues that obviously are significant, and hopefully something will be passed pretty soon, but it increases that uncertainty as well. But to answer your question, are we seeing the impacts of those specific factors in collections? I mean, the short answer sort of has to be no, we're not seeing it yet. And of course, we're just looking at sales tax filings. I mean, that's the information we have. That's our thing, and that's the view that we have. And this, but I always feel sort of the need to say it. I mean, there's some looking back. Obviously in corporate taxes and in the gross receipts tax, you're looking back their annual returns, so you're looking significantly back. But even with sales tax, you're looking back a couple months. You have, for example, September sales activity that the returns come to us in October, and we are reporting them to the public through finance administration in November. So it's really sort of a 3-month cycle. We're looking back a couple months at best. So there's some looking back, and there's also sort of in sales tax in particular, again, as you know, with this dynamic between the quantity and the price. So what we get is just what's the gross sales amount? What was the business's sales for that period? And you can have an increase in price and a decrease in sales, and it sort of depends on which outweighs the other, and so we don't really have any insight into how much is the price increase, how much is the quantity decrease, and those sorts of things. We only know the total amount that's reported to us. But with those sort of caveats, again, the short answer is no. We're not. We're seeing robust collections. We're not really seeing anything that we would identify as a specific impact from those factors, at least not yet.
All right, Commissioner, so you mentioned this a little earlier, and let's go ahead and jump to the online collection. So last March, when you addressed our legislative conference, you shared with us that you had observed there has been a significant increase in sales tax collections as a result of what you attributed to a kind of a combination between the COVID environment with the online picking up and the fact that the legislative changes that had been enacted to capture sales tax on online purchases. So that combination. So, and then in July, at the end of the fiscal year, we learned that those online sales had accounted for more than a third of the growth in sales tax revenue alone, just this last fiscal year. So now that we've kind of returned a little bit of normalcy and buying patterns, do you think that this increased online numbers, both in terms of purchases and obviously revenues, is that a function of more of the pandemic, or do you think it's something that's kind of here with us to stay and will hold steady into the future?
Yeah, and this is a fascinating subject to me. I know it's of a lot of interest to you as well. So I want to get to maybe throw some numbers out there just because I find it so interesting. But before I do that, I mean, I think the high level answer to your question is we think it's some of both. I mean, the online sales continue to show strong growth. We think even as things return to what they're going to be going forward, we're going to have a higher level of online purchasing than we had in the past. But that rate of growth, we think, is going to moderate, right? You've already alluded to, but I'll sort of echo. There's really two factors at play. There's the change in the law from the Wayfair decision, having additional online sellers, direct online sellers collecting that weren't collecting before Wayfair, as well as the marketplace facilitator collection. So that's one factor, and then the second factor, as you've already appropriately pointed out, is consumer behavior. And what has happened and what might happen going forward. Some of the numbers that we talked about last year that you alluded to remain pretty similar. If you look at October of 2021 collections, our most recent month, and these numbers are state sales tax numbers, but the local sales tax obviously is proportional. Basically for every $3 in state sales tax we collect, there's about $1 in local sales tax. So the numbers, the same scale. For October 2021, year over year growth in state sales tax collections was $170 million. 57 million of that, or right at 1/3, were from sellers that were either marketplace facilitators or newly registered since Wayfair, right? That's not all online collections. That's just the new people that have been collecting that weren't collecting before Wayfair. Is 1/3 of the total growth in dollars for October. If you break that down further, it's about half and half. About half of that is direct online sellers and half is marketplace facilitator collections. An important piece of that, of course, is the marketplace facilitator requirement was effective October of last year. Right. These numbers I just mentioned are September sales. So it's really the last month before the marketplace facilitators were required to collect. So we're comparing a month in which marketplace facilitators were required to collect against a month right before the law, right? So once we're comparing months where the law was in effect this year and last, then that we expect that to moderate somewhat, obviously, right? Now, you might not see it all of that moderation in the first month because it did sort of ramp up a little bit and that sort of thing. And similarly with the direct online sellers, Wayfair was decided in 2018. The new rule that required online sellers that were subject to Wayfair to start collecting was October of 2019. But even if you compare October 2019 to 20 and 21, it's continued to go up. So I think as we go along, that growth will be more built into the base, so you won't see those big percentages coming off those months, if that makes sense. I took a look at all out-of-state collections. All that discussion I just had was really in the context of these new filers, people collecting that weren't collecting before. But if you look at out-of-state collections as a whole, except for September of 2020, out-of-state collections were $144 million. September of 2021 was 214. So that's a $70 million increase or 48% increase. So that's a combination, right? That's a combination of these new collectors that we just talked about a minute ago and growth in other online sales, people who are already collecting but have seen greater volume. So it's quite significant. We think we'll see that increased level probably go out into the future, but not the such high growth rates going out in the future.
Obviously, sales tax, specifically online, the pandemic kind of really helped that, contributed to that. But fuel taxes is one where the pandemic really adversely affected revenues for obvious reasons. So now that we kind of have a little bit more of a return to normal travel and work patterns, how have the fuel taxes performed over the last few months?
I think again, go ahead. Sort of the short answer is they've recovered back to and slightly above pre-pandemic levels. If you look at sort of year to date, the year to date gasoline tax collections are 306 million, and that same period pre-COVID was 301 million. So it's not a lot of growth over the pre-pandemic amount, but it's back to the pre-pandemic amount year to date, first quarter.
Well, I've always believed any growth is good growth. So even if it's not the significant numbers we see in the sales tax, at least we're growing, right? That's always a good thing. So just a quick follow-up, and again, not to be Debbie Downer here, but the high prices that we're seeing for gas and diesel at retail sale, I understand the delay issue, but are you noticing anything that would suggest that these high prices now are affecting consumption and ultimately fuel revenues?
Yes, actually, in the most recent month, October over last October, there's a slight decrease. So, and keep in mind that gasoline tax is collected when the fuel first comes into the state, sort of up the supply chain at the distributor level. So there's that same lag. The most recent month of collection doesn't necessarily reflect at the pump. It's fuel coming into the state. So there's a timing issue there, but for October, we saw a slight decrease year over year, even though, again, for the quarter, it's up and it's back slightly above pre-pandemic. for the month, it is down. So I think we got to keep an eye on that and see where that goes next month.
All right, now let's turn to business tax. I think conventional wisdom holds, or at least a perception is that during this COVID period, we've lost a lot of business. I think you ask anybody, they can name several in their local community that have closed. And now, we have low unemployment, yet we continue to hear businesses express frustrations about being short-staffed and unable to fill vacancies or to get their workforce there. And I just wonder if business tax collections are going to start reflecting these sentiments. One, are you in fact seeing any indications of this, of the business tax and how it's performing, how those revenues coming in, the collections? And then two is kind of a follow-up or two-part. The perception or the conventional wisdom, are you seeing anything that holds true as you look at your closure notifications and filings? Have you seen a sharp drop off that would suggest we have in fact lost a lot of businesses?
Yeah, the business tax data is really, really interesting as well. The big point to be made here, I want to make sure is not lost, is that it's an annual return and it's tied to the taxpayers' fiscal year or their federal filing. So for all our sole proprietors and many of our entities are on a calendar year basis. So the largest part of the information is on a calendar year basis. So we won't see calendar year 21 collection information until April of next year. So we got a little while to wait, and it's quite a look back period. So that really impacts our ability to or at least the timing, how quickly we can get a view into business tax collections. But if you go back and you look at from March of 19 through the end of February 20, again, sort of looking at that pre-COVID, what did it look like pre-COVID to that same period during COVID, and for the pre-COVID year, we were seeing robust collections. It was just over 9.8% for that period. For that same period following, it was down just slightly, like 0.4%. Now, we just picked those years because it was the most recent periods right before COVID started, and the most recent year right after COVID. So you can look at that in different ways. You can look at fiscal years and that sort of thing. But we looked at that just to get an idea of collections. But again, I want to emphasize there's a lot we don't know until we get those April returns for the calendar year 21 taxpayers. Those numbers really reflect the worst impact of COVID, I guess is what I'm saying. We for this purpose, we looked at what happened right after COVID hit. As far as filings or number of taxpayers that are registered, number of businesses, that's really interesting because it might be counterintuitive. I don't know, but let me tell you what we did for a look at this. We looked at the number of locations in Tennessee that were registered on March 1st, 2020, right before COVID hit, and compared that to a snapshot of what we have today. And there was a net increase. Of course, I say net to emphasize that businesses there are always businesses coming and going. But the net increase was just shy of 80,000 businesses, 80,000 more today. Again, locations, but 80,000 more locations today than on March 1st of 2020. And if you drill down into that a little bit, I think it's really interesting to see that the big growth sectors were services and contractors, which I think is just a little bit of a view into maybe what people have been doing, and what some of the impacts of COVID have been. Some people have started their own businesses, service type businesses. Some people have moved perhaps from being an employee of a construction company to having their own, contractor business. Of course, one note of caution on that 80,000 number, Chad, is that we're viewing all of this through tax filings, and we don't necessarily know about a business closing immediately. They may not notify us. We may not become aware of it until the return is due. And of course, this is an annual return. It's due 4 months after the close of the tax year. So there's quite a bit of time involved there. And so we might not be aware of a business having closed until their return is due and they don't file. So just something to keep in mind with respect to that number.
Well, Commissioner, thanks again for spending time with us. You're always so gracious with your time. It's always very, very good information and always a pleasure to have you with us.
Hey, thank you, Chad. I really sincerely do appreciate being invited. I appreciate you letting me get into some of those numbers. I hope that's helpful. And I think I said this last year. I just want to repeat, the cities are someone who we provide services to in the sense that we collect local tax revenue and business tax revenue, and those are y'all's revenues. And we always want to do our absolute best at collecting those accurately and getting them distributed to you guys timely. So don't ever hesitate to reach out to us as an organization or individually as members and cities, because we want to provide you the service that you guys deserve. But thanks for having me on today.